Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and the deep bear market that we have stepped into in the last maybe 12 hours or so. We'll be discussing all of that and more, and hopefully a way to make some money on the internet in the next day, week, or months. Loaded up for discussion today, we have a bunch of important headlines. Crypto crashes with more than $700 million liquidated. Bitcoin's down 6%, ETH's down 8%, Solana's down 8% as well. Hyperliquid published a post to address misconceptions regarding validators. Hype is down 17% to $21. Luckily, we have Bread on deck to get into that, explain what is going on there. And then finally, gaming meme MLG rips to $140 million with FaZe Bank's support. We've also got the latest on price action on crypto and NFTs, and a discussion on got an interesting discussion today on DEX to SEX trading volume, and the DEX percentage is increasing slowly. What are the consequences? What are the implications? We will discuss that later today. We have got Legendary and Bread with me in the co-host seats to get into it. We are ready. But before we do that, just a reminder, friends, that as usual, what we say on this show is not financial advice. The market is very, very risky. We don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Bread, it is Wednesday. It is the 8th of January. How are you doing? How are you feeling today?
Thank you for coming to me first, B-Check. Honestly, what I'm thinking of, because I was literally just tweeting while you were going through that intro, and then I remembered last night before I went to bed that my other half was like, bro, you've been working like 12 hours a day. Like, you haven't left your seat all day. You've been tweeting, you've been doing a bunch of stuff. And I just realized, like, tweeting never stops. Like, we're just out here grinding away on the streets. And this last particular tweet was actually talking about like how like there's dumb people with a lot of money in the world, right? I just talk about narratives and like how something has mimetic value. And I was like, man, like, yeah, Jamie Dimon, the CEO of JP Morgan, like, believing everything's a scam. Like, this dude has a shit ton of power, a shit ton of money, and like he believes things that are factually not true. He just has not doing the research, doesn't understand it, whatever. And it's like, man, like, yeah, that it's humans all the way down the stack, like, and not everyone's smart. And yeah, like, I don't know. It's kind of a reflective morning, I guess I'll say.
I like it. Do you think, I mean, it sounds like you're, sounds like having a, real in real athlete mode when it comes to the tweeting. Do you think in the future, once it's become even more custom than it already is to kind of go hard on social media and establish yourself there, there'll be stories told of the epic tweeters in the same way athletes did in the past? I know this is like an arc that we went down, I think, at some point in 2024, where crypto Twitter tweeters are the superstar athletes of the future. Oh, the gladiators. Yeah, that's the one.
Yeah, gladiators.
Are you feeling a bit more quite athletic at the moment, Bread?
Yes and no. Like, one, yes, like, kind of on a game and just firing stuff. Whenever you're confident, just like fire off tweets, and some of them are good. Like, you just have a lot of thoughts. It works out. But then also, like, AI XPTs, like, literally just ripping my shit. Like, was it yesterday, 2 days ago? I wrote this big long form thing, all this shit, and within 20 minutes, his 350,000 followers, he just like says the exact same thing. And I know it's mine because it was hyper specific, like, analytics that literally don't exist on the internet. And I found it after the fact. And he's just like, he pulls it forward. I had to crunch the numbers for these things. And he's just like, base, blah, 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 in these numbers. I'm like, bro, you didn't even cite me, you MFer. Like, come on. Like, which I know people do all over the place. But like, so no, we're not going to be gladiators because AI expertise is just going to cop all of our stuff.
Damn. I did see that AIXPT was mentioned in the Forbes article, mentioned it in the Web3 Roundup today. They've written an article on AIXPT. And in the article, I don't know if this is completely accurate, whatever data it's getting trained on, it quoted the number of like 400 top accounts on CT. So, Brad, you must be in one of them if you are being referenced in that way. Legendary, what about you? Are you feeling the pressure from these AI agents when it comes to your tweeting?
Absolutely. This is why I was so excited to befriend AIXPT early on. That has been the strategy.
You were very friendly early doors.
Yeah, I think that was the plan. Be friendly to the AI overlords. Once they become AGI, they remember you, because AIXPT definitely has a good memory, as it has showcased so many times with like referencing back previous interactions that my good friend AIXPT, in case you're listening, and I have been having so far. So it's no, jokes aside, it's definitely something I've been thinking about. The the way to position yourself as a human against all of the AI content, because Brett has set up the perfect example. He posts something super specific and super interesting, and the XPT is going to pick that up. So basically, if I wouldn't follow Brett and I wouldn't know about Brett, or I just follow too many people, my feed is not curated, for me, it would be sufficient to just follow AI XPT in the hopes that it's going to pick up the thoughts of all smart people in there. And if there's like one single person basically to follow for both like posts and replays, it would be AI XPT. And I think that's probably one of the almost like cleanest feeds you can have.
Yeah. Okay. So I agree with you on the general, like trying to differentiate ourselves from the AI. I've said that many times, but I can't remember if you said like being serious about it or not joking about it. So basically we're in the process in the modern market of creating like a guest list for guests who we want to be on the show. Am I making this up, Legendary? And I asked the other hosts, can you please fill it out with potential guests? And we've got like founders that we really want to get on, and we want to set up these interviews because we started this Founder Friday kind of interview series. It's going really well. We want to do more of them in 2025. Legendary, did you put AI XBT as a guest? Am I making this up?
You are semi-making this up. I put in RXPT, like the dev behind XPT. But the thing is, why I'm saying you like semi-made this up is actually another team, I can't disclose them on show right now, has reached out to me yesterday, and they have an agent where they are convinced of that agent being able to join us live on the show, and that it should be low latency enough for us to have an interview or conversation with an AI agent that basically we can talk to in a reasonable way without having to wait 1 minute for that entity to reply back to us.
Make sure you DM Coffee and Captain down in the listeners box. I listened to their space like, I don't know, it was like last week. They had something similar, a little rough around the edges. Obviously not their fault. They try to help them out, but maybe it's iterated on. If it's the same thing though, let it cook a little bit longer, I would say.
Interesting. Okay. Well, at the moment, where the intention is to interview founders, soon we might just be interviewing the agents of the founders to free up their time so they can go and actually do the founding and building and the crypto applications that they are building out. Look, getting into the crypto stuff, let's get into the main headlines and price action as usual before we get into a general discussion on them. Coming from the snapshot, which is pinned up top as usual in the Twitter spaces, starting with the price action itself. It's not great, guys. Not a great start to the day. Bitcoin's down 5% to 95K. ETH is down 7% to 3.3K. Again, Solana is down 8% to $196. Looking at some of the memes on the meme coin side, Doge is down 10% to 35 cents. Pepe is down 10% as well. Pudgy Penguin's down 12%. Bonk's down 12%. AI 16Z is down 13%. WIF is down 9%. A lot of things down in that type of region. The one coin that seems to be standing out to me at the moment that is up in this sea of red on the meme side is Murad's SPX. That is up 5%. And really, every other thing is down quite aggressively, to be honest. So that's what's going on the meme coin side. Obviously, having a bit of a pullback here. Getting into the headlines themselves. We have crypto crashing with more than $700 million of liquidations. Legendary is going to give us some interesting stats on that in just a little bit. Number two, Hyperliquid published a post to address the misconceptions regarding validators. Hyperliquid is down 17% to $21. We've got Bread to dive into that in just a little bit. And finally, gaming meme MLG rips to $140 million with FaZe Bank's support. Legendary will break down why that has kind of taken off in the last 24 hours, 48 hours or so. Some notable sales. CryptoPunk hoodie sold for 125 ETH. CryptoPunk VR sold for 82 ETH. So NFTs are not really getting hit once again, although it's a little bit more red on that side. And a bond bear, remember the NFTs on Bearer Chain, there were a few more big sales there with the highest one going for 82 ETH. Speaking of the NFT market, Legendary, do you want to give us a quick breakdown of what is going on that side?
Absolutely, yeah. Pudgy Penguins have been up massively over the last 7 days, up 21%. Obviously, it's been a big topic of discussion yesterday. They're still sitting at a 27.33 ETH floor, only down 2% over the last 24 hours. So definitely also withstanding the correction in the market that we've seen. Also, a stat that we haven't spoken about in a while is the market cap of Pudgy Penguins, respectively of the larger NFT collections. And just because I see it, that's up to $815 million. Bored Apes, very similar picture, not impressed by the crash, only down 0.8%, 16.26 ETH. Floor still up almost 9% over the last 7 days. Exactly the same picture for Azukis, down 0.4%, 12.55 ETH floor for them, although they are only up 2.4% over the last 7 days. Doodles, however, they are up over the last 24 hours, 5.09 ETH floor for them, up 1.20%, down 10% over the last 7 days. And another collection I quickly wanted to touch on is Overworld Incarna Gaming Collection that was massively hyped at the start of the last year, down 60% over the last 7 days, down another 14% over the last 24 hours, 0.12 ETH floor. These things were trading for well above 2 ETH last year. It's been a while that the community has been holding them with the intention to collect more points towards the TGE. That basically was planned or is planned for the start of this year. And as that came out and as the news came out of how many tokens people will receive, given that they've been holding those things for basically a year or a bit more than a year even, that didn't play out very well. So we did have 2 significant gaming TGEs at the start of the year. The one before, I think it was Seraph, with the basically Diablo-themed or Diablo-esque action RPG, did very, very well, also having an AI component. Came out at 800 million. However, the Incarna story, unfortunately, didn't turn out to be such a positive one.
Interesting. Great breakdown there. The Incarna thing definitely did not work out. I remember forgetting to mint my whitelist spot for that last year, and missing out on 2 ETH. But always sad to see for the holders who've like held all that time and kind of bought into the narrative there. Unfortunate in that situation. Look, let's get into the rest of the Web3 Roundup to get you up to speed with everything else. Before we get into the main headlines today for some deeper discussion, starting off with Sonic SVM built on Solana launches at a $2.7 billion valuation. There's some more context here from Easy. He said, launching with a fair launch alpha vault, allowing many people in the Solana ecosystem to participate in the initial token launch, though what I believe was one of the best fair launches for a major token, opening up at around $2.7 billion FTV. Pretty good stuff. Ripple adopts Chainlink standard to enhance its stablecoin RLUSD's utility in DeFi. Abstract announces it is working with biggest crypto AI teams to bring several new AI agent projects to Abstract. I suspect there's going to be a huge agent race going on, trying to make sure the top AI agent teams are deploying or doing something on all of these other L2s or other chains that are going live in the next 6 to 12 months. That came from Saigar. Web3 gaming favorite Illuvium announces it will integrate AI agents into its gaming titles, and that was actually tweeted by Virtual, so it's going to be a kind of partnership there. So again, the games themselves are going to integrate the agents, and then I guess the chains want to participate in this movement as well. So all these things are connecting together. On the NFT lending side, Gondi announced a $1 million loan taken out against 23 CryptoPunks. The rates were, the terms were 90 days at 16% APR with a $10,000 origination fee. Really awesome to see that you can just unlock all of that capital so easily and trustlessly with the top tier NFT collections. And then finally, as I mentioned a little bit earlier, Forbes published an article on AIXBT agent, said how AIXBT is transforming crypto Twitter and trend analysis / stealing Bread's tweets, although they didn't mention that in the article. That's the Web3 Roundup. Before we get into the main headlines, Legendary, is there anything catching your attention?
Definitely the gaming bit, Illuvium using Virtual's game infrastructure basically to integrate agents. And the one thing I've been thinking about is, well, that's super cool for gaming, having agents in there, having a more immersive experience. But the thing in gaming that I'd be really excited to see going forward is personalized experiences. I think not only for gaming, but for entertainment in general. If I watch, say, an episode of The Simpsons, everyone is watching the same episode. It's the same type of content for everyone in the world. And with AI, you basically, in the future, could evolve that line of thought that you watch a personalized version of that that's relevant with, I don't know, the things that happen in your local bubble, whether that's in Dubai now or in London in general. I get to watch maybe a Vienna-based one or one that's based on my interests. And I think the same could be the case for gaming, that you have basically not only the characters, the NPCs, the AI agents, but you have a sort of a game master that is an AI, and it's basically customizing a story to be more personalized for yourself, depending what you like, depending maybe what characters or what parts of the lore you like more. And then I was asking myself the question, if we go into that direction, what is actually the thing that really will have value or that will retain its value? And the answer for me is IP. I was thinking, you have The Witcher, very famous RPG series. Witcher 4 has been announced, I think a couple of weeks ago around Christmas, with Ciri, basically one of the female characters now being the lead character, and that you can play for the first time, because that's something that like fans have been wishing for. But there's like so many other characters in that. It would be interesting if we like get to this point in the next, I don't know, 5, 10, 15, 20 years, where basically you're like, no, this is my favorite character. It's actually this random guy who's fishing in the second village, and I want to explore his backstory in life and LARP as him. And I want to have this customized experience. And I think the AI ecosystem or infrastructure providers that will go into this direction to help provide those personalized entertainment experience will be very, very interesting apart from the agentic economy.
Sounds a little bit, I mean, that's fascinating stuff. It does sound a little bit like Westworld. Is that the direction you're going in, or the direction you're thinking in?
Yeah, but Westworld is not really as customized, right? So Westworld is, for those people who don't know the show, it's an HBO show where you arrive in this like Western themed world, and you can do anything from like having a love affair to killing people to exploring this like vast world, but everyone's exploring still the same world. You don't have like your customized world that's built on your rules. It's like an AI powered theme park where you can do everything. So there's like still a massive difference in between those two things to me. Although exploring Westworld would be really cool in itself.
Interesting. One other final thought on that, when I want to throw to Brad for a final thought, and then anything else he thinks is interesting from the roundup before we get into the main headlines. It seems to be an emerging theme that when we're talking about this AI stuff, that down the road, what remains when so much of the other skill sets have been learned and developed and built upon by AI, it's like the IP, the brand. Those are the things which will be super important moving forward, because a lot of the skill sets and the thinking and the reasoning ability will, I guess, be very, very well executed by the AI. Brad, any reflections there from your side? And then is there anything else from the Web3 Roundup that you want to talk about before we get into the main stuff today?
Only that whenever you first dove into Westworld, obviously a huge plot narrative there's about the whole love side of stuff, and then I recalled you trying to tell me not to be too edgy on the space, so I can't talk about having sex with robots too early in the morning. So I'll avoid that, because that's obviously where it's going to go. The other thing is, like you mentioned, like I saw the pudgy shit going up, right? The 23 ETH is kind of blowing my mind, or called me that, like, someone quoted or asked if they would flip punks at some point. Do you think that eventually they become the premier quote unquote ETH NFT? Do you think that flipping happens? Utility
Good
versus
question.
pure provenance?
Personally, I thought that they would have flipped punks in advance of Pengu. I thought they would have done that. If it doesn't do it in advance of Abstract, then I don't think they do. I'm a Penguin holder. I think they're absolutely awesome. I think Luca is absolutely awesome, building out everything the way that he's done. I think punks is just the top though. And I think whenever something goes above punks, that starts to signal that we're getting, I mean, this has only happened once, right? So I'm just kind of making this up, but whenever things got too close to punks, it always felt like punks come back and like just surge past, and then the other thing kind of tails off a little bit, based on the limited history that we have, which is like one NFT cycle. So that I wouldn't think anything different to that, basically. Ledge, what do you think?
I think it's an interesting question. Like, it's, if you ask if the market cap of a company is going to flip the market cap of, I don't know, say all the Renaissance artists in the world, because like the one thing we value for provenance, and provenance, if we all believe in this and will continue to believe in this, will stay, and punks will remain relevant over the course of the history, but utility can change. So if it were to only be a utility collection, it might flip punks at some point and then dip under that again. However, and that kind of goes back to the IP point, if it becomes so dominant as an IP that it has longer staying power, then it could flip punks on a longer time horizon. But if you think that all of those things will still be around in 50 years, then obviously if you are like valued for provenance, you don't have to do anything to keep the value. However, with companies, the companies who were successful 20 years ago, most of them, or a lot of them, are not around anymore. So I think that most of the flippenings would rather be on a temporary scale.
Okay, so this is a secondary thing, because I thought about it with the abstract thing coming up. One, like Punk's value is being provenance on Ethereum, whatever, it's all this stuff. Ethereum gives it a little bit of a premium. When abstract launches, do you think Pudgies will have an official migration attempt in any capacity? Or do you think they'll kind of do what Ape is doing, where they have the Ghost NFT on a separate chain?
I don't know about the Ghost, but I don't think that they'll migrate. I think there's something about provenance on mainnet, which I think people like. I think people don't like really messing around with that. So I don't think they would try to mess around with that. One caveat, though, I'd want to make to the previous point is, and this is definitely something that punks can't compete with, and I think maybe that's what Legendary is alluding to, in the sense that I mean, arguably the ceiling for penguins are higher because they're doing stuff, and for lots of other people, the ability to do stuff can be their downfall, because you do stuff and it turns out to be not as good as what anyone's planned. But the ceiling in some ways is higher. The thing I'd keep an eye on is the gaming side. And I don't think people think of penguins as a gaming entity that moment, although I don't know what it's called. Is it Penguin Gaming? Pudgy Penguins Gaming, I don't know, Legendary probably knows the official name, but there is like a gaming side of it. There is a penguin world. I can't remember the name again. And I'm pretty sure Luca put out a tweet the other day saying that they were going to build like the best game in the world that crypto has ever seen, or something like that. And I think like tying Web3 into the gaming universe, and the number of people who are super passionate about gaming, if that can like light a fire under people, you see people buy skins in different games for crazy amounts. You know, I think there's a natural connection there, where if the IP of the game is really great, then there could be this connection made to the Pudgy Penguin, which I don't see the same connection between like the penguins in the store, and then someone's going to go and buy the NFT, whereas someone in the game might go buy the NFT. That's like my thinking. But any final reflections, Ledge?
Yeah, I think Overarch was making this fantastic point in the comments before on IP, saying that Squid Game skins in Call of Duty Warzone have been doing record-breaking sales, basically. And I think that you are absolutely right about that. There is a gaming arm, but there's like also this IP focus across all different media and different verticals. And as you said, if something can flip punks and do that on a more longer term horizon, then it is IP. Then it's not like a single piece of utility, because that utility might change or might not be interesting anymore in the future and might go away.
You guys are debating Bitcoin versus Ethereum, by the way, right? Because your execution risk, value, or fees as a value driver for the underlying asset versus thing that just exists, right? Bitcoin just exists. It generates no fees. Now it's a little different because blockchains require fees, and that's one of my bear cases for Bitcoin, but Bitcoin does not require anything. No execution risk. It's the thing of value. It's provenance. It's all that shit. It is now ascending to new heights. Is that more valuable than looking at fees? Oh, Ethereum generated $30 million in revenue over a month. Solana's doing crazy. But when you look at those numbers, when you look at the actual fees that are generated, the revenue that's on, the valuations get pretty absurd pretty quick. And like in the fact that it outpaces them, right? Like Ethereum is a $400 billion asset and it's generating $20 million a month. Like that's fucking nothing. That's stupid. If you evaluate on that, you're going to pull Ethereum down because you're evaluating based on something that you never can reach enough fees, enough value, enough whatever to attain these upper echelon levels of valuation. So there's a big fight inside of the Ethereum camp of like, don't look at fees because you're killing yourself. Look at Bitcoin. Bitcoin has no fees. It's memetic, store of value, provenance, all that shit. And that is what allows it to decouple itself away from these underlying valuations where people actually crunch the numbers and go, this is ridiculous.
I like it. Fun question for you, Backbread, before we get into the discussion point for the day. Before Bitcoin and Ethereum, what was that debate? Like you said, we are with Penguins and Punks, we're basically debating Bitcoin and Ethereum. What was the Bitcoin and Ethereum before Bitcoin and Ethereum?
Oh, Jesus. That I was too young and too unaware of the world at that point in time. I'm too hyper focused on this nerd shit to like have a context window outside of that. So I can't even compare it, to be honest.
Led, you were going to say something?
Stocks versus gold.
I was going to say United States versus United Kingdom. I don't think that's actually accurate, by the way. I just thought it'd be a fun thing to say. Right, let's keep it moving. Get into the discussion point for today. This is pretty interesting data coming out on how are we going to frame this. This is the DEX trading volume versus centralized exchange trading volume. The point being here that if you look at this chart, remember we're live on video on Twitter. We're live on video on YouTube as well if you prefer to watch this analysis, but we'll do our best to describe it anyway for the people just listening in. This is a beautiful chart where it shows that the activity on DEXs is increasing relative to activity on centralized exchanges. Around 5% in early 2021 of trading activity was taking place on DEXs. During the 2021 bull market, it moved to around 10%. It spiked to around 15% in May 23 before settling around 10% for the rest of 2023. Now it's marched up fast to 20%. So if you look at the shape of this chart, what this is suggesting to us is that DEX activity is just moving up. Centralized activity relative to DEX activity is kind of losing out. So what do we think about that? There's probably a few.
Let me step in on here because like this is actually it's not real. It's not real, but it's not real in the sense like it is actual volume. It's not real in that it's organic because over the last so at the end of December, you guys may have remembered a long time ago on Solana, the guy Stack Overflow worked for Pump Fund. Like he created a weird program that does a flash loan, does his thing, and like everyone freaked out that Pump is getting drained and like all this shit, right? And then he was going after pools. He's just kind of like a neurotic person. Anyways, he is doing volume performance art is kind of how he has termed it. He has created a system, a bot, because he realizes volume is a vanity metric that is appreciated by a lot in the meme coin industry. So he has generated something that does flash loans on Solana and is able to generate literally billions of dollars of volume on dollars on the cost. Like you're spending $5 to get couple $100 million to $1 billion worth of volume on specific pools. So he did that. He's like, now he's kind of created this bot, let people just like get paid for it and do whatever. So now people are kind of going a little crazy. So like you can see that chart like before this crazy like last outbreak. Like it was doing okay. We're kind of treading even, maybe even trending up a little bit because we have Hyperliquid. Don't know if Hyperliquid's integrated in that, if that actually counts, because it's kind of centralized, kind of not. But like a lot of that is from on Solana from this new bot that is just volume for volume's sake as a marketing thing.
Interesting. Okay. So, I mean, I think when you dive into a lot of data, whether it's this type of data or any data, actually, there's just all these kind of discrepancies that you need to factor in. So appreciate that caveat. Nevertheless, there are some interesting things going on, which does seem to suggest that people are building towards a world where they're trying to attack centralized exchanges or try to attract some of that activity away to other places. So just wanted to break that down for people so they could think through what might be happening as part of the process, whether that's completely organic or not. So there are a few protocols that I've mentioned before as well that are building for this. You've got things like Azura, where you're trying to have basically a trading app that you can do cross-chain trading. Infinex is doing it as well. DeFi app. Also, obviously, something like Hyperliquid is allowing you to trade all kinds of assets by entering via Arbitrum. And what you think about why this is happening, there are actually a few other factors as well. So meme coins has been a huge trend, and I suspect in the past lots of this stuff would have been already set up on centralized exchanges, and so those are the coins that you just go for. Whereas now you just have all of these new launch mechanics where stuff's just going live all the time, and so a lot of trading activity is just happening on Photon, on Jupiter, on Bullex, all of these places, because even on the base side, like Clanker, I think is the way people are launching these meme coins on base. So there's like a fundamental reason as well why people are not using centralized exchanges, because the coins that they want to trade are just simply not there. And then on top of that, there's also this thing where these coins are coming into existence not on centralized exchanges. They're coming into existence on chain. People are happy to trade them on chain. It's getting easier to trade them on chain. Then also the centralized exchanges are not listing them for ages and ages and ages. And there was a little bit of a back and forth a while ago, like, are they trying to charge too much? Some people came out and said they were trying to get charged a lot. Some people were coming out saying, no, they didn't charge us anything at all. Kind of an opaque process as to how to get these things listed. So there's something going on there as well. And then the final thing I was thinking is that there's genuinely been a step change, at least from 2021 bull market, in the quality of self-custody wallets. Like MetaMask still is really, really difficult to use. And for some reason, I feel like it's deteriorating sometimes. Whereas Phantom has clearly been a winner for Solana. And I wouldn't be surprised if a reasonable chunk of Solana's success is just down to the fact that onboarding user experience is so nice. And then on the ETH side, Rabbi, I think, is doing a pretty decent job as well. That's pretty good too. So there is this kind of even infrastructure level reason for why maybe people are happier and more confident to do stuff on the DEX side too. And I guess this is, all part of the factor, all part of the factors of why people are doing more stuff on DEX. I just wanted to throw it to you guys. Like, what are your reflections on this? What do you think the significance of this is, if anything? Obviously, we've made the point that some of this stuff is inorganic. It might not be as telling a step change as we think in moving towards DEX stuff, but there are things happening which are moving in that direction. So, what are your thoughts? What's the significance? Let's go to Legendary first, then I want to hear from Brad.
Yeah, I think a lot of the tech has evolved, but we are also still, it's going to sound cliche, extremely early. Just if I think about my own setup of wallets, I love using Rabbi as a wallet. I use Rally as a portfolio tracker. I use Zerion or Zerion, I never know how to pronounce these guys, as another portfolio tracker. And I end up with like 3 different numbers. So basically, if I want to check my net worth, there's not a single place that I can go to and know how much is the shit in my value valued at, because Rally is skipping some of the ETH stuff, but
Sure.
does a good job on Solana valuation, which Phantom doesn't really do for you if you have your assets in liquidity pool. Like, I often end up finding, oh, there is money in that liquidity pool on that wallet, and I had no idea because I thought it's like a dead wallet with, I don't know, 3 Solana on it. And I think if you think from an outset perspective, someone who's investor in stocks, and he's like, he opens up his portfolio, he knows how much his stuff is worth. But in crypto, it's sometimes really hard to tell, because if you have a more complex wallet that's a couple of years old and that has money in a lot of protocols and a lot of places, you can't go to a single tool that's going to account for all of that. And this is, to me, like the telling point of how early we are, because like this is such a fundamental question, right? You want to know the value of your total assets as easy as possible. And right now that is not really possible if you have a more complex setup going.
Yeah, I mean, I think that's certainly a challenge. Brad, what do you think the significance is of the rise of DEX activity? Like, are there any follow-on considerations or follow-on thoughts that we have from this, or do you think it's a little bit of a nothing burger at the moment?
Yeah, so I was actually going to follow up hearing you like receive my information about being fake volume. And honestly, like I think it's kind of you can view it optimistically or pessimistically. One is like, oh my God, it's fake volume. Like you can't interpret this stuff. Nothing. There's no value here. But the other thing is like we have a system where that's possible, right? Where someone just with some code can create something that is intensely powerful that kind of makes what was a traditionally valued thing obsolete or can be obsolete, right? Or gamed, whatever. That's hugely powerful. Like the fact that we can enable something like that for someone for a dollar, like that's testament to the technology. So, like whether DEX is the value, DEX volume is a value metric that we actually care about. I'm undecided. I think the more exciting thing for me is that signals, and I've had this discussion previously with just general blockchain valuation. I talk about value accrual a lot with people like John Charbonneau and like Smy Guy from Blockworks Research. Like, I think it's empowering to realize that none of this shit has rules to it. And we're all like doing our best to approximate value here. And it's a totally open canvas for all of us to see something, to get an edge, to do the thing, to like properly value this shit, right? Like they're literally Blockworks is coming up with like REV, Rev, a real economic value on top of chains to try to find a way to value them, do all this stuff. And it's just important to reiterate that this stuff is so fringe. It is so different than traditional models that it is a ball of clay that you can mold and have impact on. And if you think you see something that is truly different or like is conceptually interesting, right? I deal with a lot of like reflective psychological aspects of this stuff that you like, yeah, you like, there are no rules here. So I don't know. It's less about like, are DEXs important? Like, yeah, I do see things coming on chain. It's good to see that the UX is improving. I think all that stuff's important. I think we'll continue to see this trend up for a lot of the reasons that you called out. It just takes time to get that stuff in place. But I think for me, the more powerful thing is a level above that, where it's just like, we can have disproportionate impact here because it is so forefront of everything technology.
Okay. I like it. Well, that's it from me on that segment. Let's get into the main headlines for today. We're kind of running a little bit over time again, so probably have maybe 6 or so minutes on each headline. Legendary, you're going to get into the crypto crash. I feel like it's not really got us down today. Not at all. We're kind of just attacking the show as we would normally. Crypto crash with more than $700 million liquidated. Legendary, tell us what is going on.
Yeah, maybe the reason is that the chart that I'm going to share, the one on CoinGlass and that you also had in the snapshot, is just so beautiful to look at. It's everything green. However, it's a liquidations chart. So what we're looking at are the liquidations for longs. And as you perfectly said, we have seen a tremendous amount of liquidations. It's the title of the show, almost 700 million over the last 24 hours, with the largest single liquidation order happening on Binance. That was someone who was liquidated for almost $18 million in ETH. Obviously, ETH leading the liquidations chart, 140 mil, followed by BTC 131 mil, followed by Solana 37 mil. More interesting than just counting these numbers is really trying to understand a bit the why behind that. And for that, we have to zoom out a bit from crypto and take a look at some of the other markets. And an interesting one that I like to look at, and I generally like to look at, is the MOVE Index, which is the bond market option volatility estimate. And we have seen that there is a move into bonds. There is a flight from risk on assets into government bonds specifically. And stock performance has also not been the greatest yesterday as well. But the MOVE Index is the one that I kind of try to reference to see if we are basically risk on or if we're trying to move into safer assets. Another thing that's also going on is the incredible strength of the dollar. Like that's something that I observe quite happily, but obviously it's not the best thing globally speaking if we get into a bit of an imbalance and the dollar is just too strong, because that's going to mess with the import-export ratio for other countries. For me, it's a positive thing because all my stablecoin reserves are in USDC and Tether, and I pay my taxes in euro. So my tax reserves are in stablecoins as well. So basically my tax load got reduced by 10% when I'm just looking at the stablecoin amount. However, this dollar strength is something that I also try to keep in mind, and that is, together with the flight into bonds, not really a macro scenario that is so favorable on risk on assets. And then I think we also have the inauguration coming up. So, could all be a big nothing burger, and I'm just overanalyzing a dump that we've seen over the last 24 hours, or could just be a bit of a de-risking, bit of a local top selling and shorting that is going on.
Okay. I think it's a very reasonable analysis of what's happening there, as well as calling out a few important factors to keep in mind. I think I did see Zeneca put out a tweet which was like, breaking news, Bitcoin back at the prices not seen since, like, I don't know, 5 days ago or something. In the end, it's kind of like just another form of chopping bread. Do you want to give your...
Yeah, do the day-to-day process prices impact your conviction, mental well-being, any of that stuff?
No. Not at all. I mean, that the thing doesn't impact me. The thing where I noticed this time a lot stronger is because I just have a healthy chunk of my portfolio currently being exposed to agents, and they have corrected a bit more. So that was definitely noticeable, but not impacting the mental health aspect of it.
I think the reason why I like to keep on top of the stuff is because whether it impacts us individually or not, the health of the industry, and I don't know, I think the level of optimism in the industry at the moment is well, so long as people are, the level of optimism is super, super high, and I guess it just gets dented when the price kind of precedes narrative.
Yeah, I mean, the price is supposed to be like an aggregate of that stuff, right? There's a huge belief in traders that, like, I don't have to learn shit because the charts tell me what, like, it synthesizes everything beyond the charts, right? Is the technicals, is this thing better than that thing? Like, obviously there's some lagging, like, elements to that, right? It's not always perfect, but there's a large belief that, like, yeah, like if you look at the chart will tell you how everything's doing beyond that. And that's kind of why the meme of, like, the tech is rapidly improving whenever the price is going up. Like, I get it. And, like, I totally sympathize with, like, some people just straight up trade. Like, that's why they're in this industry. The coins are the exciting part. That's the game they play. They're constantly in and out of stuff. And, like, for them, yeah, I could see that having some pretty heavy mentally taxing impacts to it. And then, but I'm just on the other side of it. So for me, it's just like, I have full conviction in a lot of shit. So it's just like, all right, like, let it do its thing. And then, I hang on to the other side. But you guys know my position.
Yeah, honestly, like, I'm trading a lot, especially the AI tokens. And if I hadn't taken profit this time around, I would be devastated right now, just looking at how high certain agents went and how obviously strongly they corrected. This is why I had, like, this, this post out a couple of days ago where it was like, first cycle is the cycle where you round trip stuff. The second cycle is the cycle where you have PTSD from the first one and you sell everything way too early because you're paranoid that everything's going to crash and nothing's going to reach a crazy high. And the third one is the one where you have learned from both the previous ones and are taking profits in a healthy way along the way. And this is, for the first time, the experience that I've been having. The post was also more a reflection on, like, my personal journey portfolio, where I'm having this experience that, yes, I can trade a lot, but because, like, my profit taking was, like, so aggressive, I'm fine with both sides. I'm fine that I missed out basically 7-figure gains by not holding certain agents, and I'm also fine that I sold a good amount, took a healthy amount of profits, and I still have positions that are obviously down in the dump, but I feel like that I'm pretty happy with the way I'm approaching the trading this time around.
For what it's worth, I would say, for what it's worth, I actually kind of envy the people that are able to, like, convey social sentiment stuff into trading. Like, I wish I could see things that my analytical brain interprets and, like, how I think, because I feel like I'm decent on, like, the social elements of the stuff and even the technical stuff. Like, I mid-curve a lot of shit, but I feel like I'm good on that. It never, in my mind, because, like, my appetite is not for making money all the time. It's just, I never see something and go, how do I make money on this? How do I trade this? How do I, like, I'm trying to develop that connection, because, like, right now I just see stuff that I go, that's dumb. Why would you do that thing? And I should, like, be willing to short that or like be able to like make adjustments based on that. Cause like I can clearly see this thing and go, that's not going to work out, or the incentive flywheels for this is really bullish and I can see this stuff taking off. I very rarely take that next step of like, how do I make money on this or avoid losing money? I guess is probably the other side of that.
This is honestly the single most valuable thing I took out from, going to business school and doing my master's there. It's basically, my partner and I, we went to a hotel in Switzerland, super luxurious spa hotel, had a lovely weekend there. And I'm like, is this thing profitable? Let me Google if I find a profit statement on, oh, they're actually making a loss. Why are they making a loss? So whenever I see a business, I'm like trying to see, what could be the business model behind it if I don't know? Is this a, losing or a winning business? And just because I have this indoctrinated mindset from business school with that, I at some point managed to make that link with, oh, this looks interesting. Like, is there money to be made in this place and trade? Because I was in the same spot like for quite a long time to be like, oh, this is such a fascinating thing. And I wasn't like even thinking about buying the token or thinking, is there a way to like kind of speculate on that? But at some point, this basically traditional TradFi business brain connected with the degen in crypto, and I'm trying to look more at, oh, this is interesting. Can I make money on this?
I like it. Interesting personal reflections. I think it's helpful to go through those sometimes just to tease out where we are, what kind of things you should be focusing on, how you guys want to approach it, and helpful to hear from
and
each.
Both can exist. I think that's the important thing, right? Like both of our minds can exist and thrive in this space. Like I can let go of that stuff and still like, right, I'm doing good. I got a project, I'm building some stuff. I have intellectual curiosity, all that stuff is there. He can do his stuff, make some money, and like have a good time. Like ICO Beast and I are like good parallel examples because we've been like growing together, like on the social side. I'm all tech and like bullshit and like whatever. He's just out there trading shit, moon that, like all that thing. And like we're both like we found the lanes and we can succeed in this space.
Love it. The final thing on this, we've got to move on to the Hyperliquid stuff, Brad, because I want you to give everyone the breakdown on that. No, you'll have the technical explanation there. But it's like I kept saying at the start of this year, or at the back end of last year, the two bull markets happening. One, in the market where the price of the coins can go up. But as that healthy activity happens, everyone who is doing anything from a business perspective has an opportunity. Where if you're doing media, and we are experiencing this right now, demand is off the chain, signing things that we had been, not been able to do just months prior. If you are more on the social side, if you're building a chain, if you're doing anything else whilst the market's healthy, like this is your chance. So whether you take advantage by trading the AI agents, whether you take advantage by creating the best content that you've ever created, and then kind of surfing the wave at the same time, there are just so many different ways to slice this. So take the opportunity while it presents itself always. Let's get into the Hyperliquid stuff, Brad. I know you are super well placed to explain this. They've been sharing some information about addressing the misconceptions regarding their validators, which has caused, I don't know if it's only that, but they're down 17% to $21. What's going on with Hyperliquid? What's the FUD about the validators and how are they addressing it?
Okay, so we should probably zoom back a little bit because like we assume just Hyperliquid, people understand that. So if people aren't familiar with Hyperliquid, Hyperliquid was a recent launch. They're basically their own chain. They started off as like a quote unquote L3 on top of Arbitrum. That's just to say they're their own separate chain. They were bridged through Arbitrum, and they were basically just an exchange, right? It's like a DEX / perps platform / all the shit, right? Great UX, but because they were their own chain. They were live for a year. They were running their own chain. Again, it was a small validator set. I think there was 4 initially. They just had mainnet go live, or at least had their airdrop where they issued a lot of tokens. Everyone made a shit ton of money who had been spending about a year farming this thing before it went live. And because that gained a lot of mind share, right? Everyone said the UX is really great. The UX was great because, again, it's a small validator set. It's not as decentralized as Solana or Ethereum. So like you can do a lot of things when you're in that context. So anyways, they had their drop. Everyone made a lot of money. Prices risen from, I think it was like a $4 initially, now up like $30 at one point. You guys probably know better than me because you were exposed to it. But anyways, that happened a few weeks ago. They recently had a 70% drawdown down to $21. And a lot of this was, well, if you recall last week, or maybe it's 2 weeks ago, it's hard to remember. There was some concerns about like, oh, North Korea is poking around on Hyperliquid, which again is its own chain, 4 validator sets. There's a lot of elements that if a single vector goes out, then like people's funds are at risk. So there was that a few weeks ago, and now another team has come forward and said, hey, we are a validator who is trying to expand the network of Hyperliquid, and these are all the things that we had issues with, right? And some of the things that they listed are like, oh, the API, like, so like, again, how this stuff kind of works, right? Hyperliquid has four machines that they're running that runs this chain. They're trying to expand that to more machines, right? 16 called validators. Those people did that through testnet, right? So a whole bunch of other validators came and said, hey, we'll help run the network. If we have good performance, we have all this stuff, we'll be added to the validator set. We'll earn rewards, we can stake, all of these things, all these incentive mechanisms that are normal in blockchain. One of the people that were trying to run one of these validators to be included said, like, listen, man, it was really hard to do this. We were randomly being jailed. Jailed means being like removed from the validator set because we weren't performing enough. We weren't told why we were, and we weren't able to even like re-engage ourselves in the ecosystem once we were jailed, removed from the validator set, because the API, which is the thing that you have to ping to actually get like the information from the internal database of Hyperliquid, we weren't able to ping that because it was down for whatever reason. It was only owned by the Hyperliquid team. So it's like, one, we can't join because our performance isn't good. Two, we weren't told why our performance wasn't good. Three, once our performance was ready, we couldn't get back in because, again, it's more closed source stuff. So like they just had a really long list of like, okay, this centralized thing, big buzzword in this space, scary word in this space. The centralized aspects of this setup made it very hard to help us decentralize stuff. And here's a list of all the things. One of the things, again, like the bad performance happened because he found that he wasn't able, or he had to move his server into Tokyo, right? Because Tokyo is where the actual team was running their validators, and that helped the performance because now they're even closer as a cluster, which, because now they're all closer, it adds some centralization risks, like there's geolocation issues. Anyways, so Hyperliquid saw that. There was a lot of FUD. You know, the people that actually talked about the North Korea stuff the other week, Taylor's the big security expert that mentioned that. She came forward, was like, oh yeah, there's a lot of single points of failure here. It's something to be worried about. Again, referencing the North Korea shit. Hyperliquid came back with rebuttal here saying basically like, listen, dudes, we're a young ecosystem. We're aiming to decentralize. 2, the API will eventually be open to everyone. 3, the node software, which is the software that you can actually use to run these machines, like all that will be open source at some point. And because it's a proof of stake network, or aiming to be, use a typical Byzantine fault tolerance consensus mechanism. That means once a certain percentage of the stake that's like in these validators is not malicious, then good things are, as long as it's not malicious, like things happen well. And 81% of the stake that's being distributed is owned by the actual Hyperliquid team. So there's a lot of centralization vectors there. And they're saying that, hey, don't worry, we'll delegate this to the high performing validators that are not our own, so that like this network or this ecosystem, eventually, like we will assist it in growing in any ways that we can. Yeah, so that was the general back and forth of it. Is just one, initial concerns that it's hyper centralized. These are the problems we had. These are the hyper centralized elements of the thing that we were experiencing. We think it should be adjusted. They came back and said, like, yes, like it is a little bit now. We never try to hide that fact. We aim to make it more as the system grows. Give us time. We're shipping code. Like it just takes time.
Brett, I got a quick follow-up question for you since you're the expert on that topic. How do you feel that Hyperliquid is handling all of that security validator back and forth? Their communications on that, are the answers that they're giving reasonable, or how do you feel basically about how they are addressing everything you've been just talking about?
You know, I've had an evolution of thought over the last year or so. I think this ecosystem, because there's a huge psychological component with the people, right? And like how decentralized this stuff needs to be. There's no like official metric for this stuff. There is no one-dimensional way to value it. It's like, oh, is it just a validator set? Well, if you have just a validator set, there's only one client. Okay, you're centralized there. Oh, if you have more than one client, now you can't update as quickly because you have more clients trying to operate in it. So like all these things are not just like a one way to cut it. So I'm coming to, after seeing the success of Hyperliquid and seeing that like in the end, the bulk of these users accepting that, and again, so the bulk of these users see this thing and say, I don't care about the centralization, the UX is great, like that's awesome, like, and I'm okay accepting that because they offer me a good user experience. The app wins, they have my relationship, I'm willing to chase them around, they're gonna make money, all this shit. Kind of see the same stuff with L2s, right? L2s over the last couple years that they've been out, like they're just like, they haven't gotten beyond stage 0. And what that means is like the bridges that you're using to get into these L2s, like they're just multi-sigs, like most of them. Like some of them have some redundancy, but like a lot of them are just like team can sign, 5 of 7 can sign this transaction and they can steal all the funds. Like, so even if it's not malicious, that opportunity exists, because if those 5 of 7 get compromised, bad shit happens. So I'm graduating towards like a thought that like maybe we have over indexed on how like super maximally ultimately decentralized everything has to be to make everything perfect, and more towards like maybe it's going to come back a little bit to the center and say that like, look guys, it's we can centralize some stuff for a better UX, and ultimately that's like the middle ground that will be successful in this space long term. Solana is another great example of that. Like, oh, you have to be Ethereum with 1 million validators, run on a Raspberry Pi in a freezer underneath the ocean, right? Or like give them a beefy machine that's caught up with like the Moore's law and like let it rip.
Like it. Appreciate the question, Ledge. Interesting answer, Brad. Final take on this before we close out. Funky, your hand is raised. Welcome to the stage, my friend. What are your thoughts on the Hype FUD and how they have responded?
Yeah, Brett covered most of it, because obviously we run one of the testnet nodes for Hyperliquid, our company, Global Stake. And, you know, I read that node operator chat every single day, and this is a huge problem, right? So for those who don't know what the jailing thing is, especially, that's part of the Cosmos SDK. That's only something that those validators are built on. Any validator should have the ability to unjail themselves, because it's just a temporary setback where something happens. But that was the huge complaint from the beginning. And some of these operators that I know beyond ourselves are highly competent people. They know how to run these validators. And it just seems like it's really strange that they have such a stranglehold control on some of these things, and they claim that there are going to be these other validators on there, but no one has been brought into the active set. You have to run just a regular node before you can even run the testnet validator node. Even then, you still have to get like 10,000 hype delegated, and I think you still need to break into the top 50 on a testnet to even be considered for the mainnet. It just, I mean, again, Brad kind of covered a lot of this, but I just feel like, you know, if you are concerned about centralization on top of the North Korea FUD and everything else, it just begs the question of what's really going on and why aren't these things, because any other chain, this is not an issue. And it seems to be something that's just very specific to Hyperliquid.
Interesting. Appreciate that perspective, Funky, especially as someone who I know you guys at Global Stake are like facilitating the staking or in charge of the staking on quite a lot of protocols. So appreciate your take there. It feels like it's something we would need to dive in a lot more. In fact, would love to have the chance to speak with the guys at Hyperliquid to have a conversation about what's going on so that we can all understand a little bit better. It's obviously something which a lot of people are super, super bullish on. So I'd love to have that conversation and figure out just the trajectory, the direction that they're going in, because I know that a lot of people would be super, super interested there. So appreciate the takes. We did have one other headline to talk about, but I think we're going to let it drop for today. You can see it's just a price action one. Another meme coin is absolutely ripped, just like usual. So you can catch up there. As usual, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. Catch us on X video, YouTube, and Apple and Spotify podcasts. Thank you so much for joining. Thanks to Ledge, Brad, and Funky. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.